Today is the 12th of February 2024. Welcome again to another short educational video courtesy of investingsuccess.ca. In this video, I want to continue my look at German-American astrologer Georg Bayer. And recall from my previous video, I had told you that he had arrived in the US around the year 1900. He would have been about 20 years old at the time. He came to America with a lot of knowledge of astrology. Now, where he got this knowledge or from whom he got it, he never did admit in any of his writings. But it wasn't long then before he got himself settled in New York and began trading Chicago wheat futures on the Chicago Board of Trade. And he used astrology in a lot of his dealings on wheat futures. And by the mid to late 1930s, he was documenting a lot of his astrological techniques, and some of them are very, very far-fetched, but I have done some back testing, and boy, I'll tell you what, these things still work to this day. And how exactly he arrived at some of these, we don't know, and he certainly doesn't say what kind of research he did to figure them out, but they do work. And I'm also discovering that a lot of his techniques that he used on wheat also work on things like crude oil, gold, the Dow Jones, and the S&P 500. Now, before you can apply any of Bayer's rules, you of course have to have some planetary placement data. You can go out and buy yourself tables of ephemeris data. If you're going to do that, get both a heliocentric ephemeris and get a geocentric version. Maybe you have some software at home that will apply planetary placements on stock charts. If you do, great. If you don't want to buy any of the ephemeris books, take a look at a website like astro.com, and you'll probably find on there they have got the geocentric and the heliocentric ephemeris data that you can look through and pick off the data points that you need. Now, I'm going to talk specifically in this video about Venus and Mars because Bayer did formulate some rules concerning Venus and Mars. And so if you were standing on the sun as your vantage point, you would be able to look out into space and you would see the planet Venus going around the sun in 225 days. So we say that that is its heliocentric orbital duration. You would also be able to see the planet Mars going around the sun a little bit slower. It takes 1.9 years for Mars to go one time around the sun. These orbital paths are not perfectly circular. They are, I guess you could say, slightly egg-shaped. Now that means that there will be a time in their orbital journey when these planets are relatively close to the sun. We call that perihelion. And there will be a time when they are relatively farthest away from the sun. We call that aphelion. And it's the perihelion and aphelion features of these planets that caught the attention of Georg Bayer. And so I have used my heliocentric ephemeris tables, and I have looked up online the dates when Venus has been at perihelion and the dates when it has been at aphelion. And I noticed something very, very interesting. If I go back 6 years in time and I look at all of the Venus perihelion and aphelion events, I notice one thing. When Venus is perihelion, that event will occur when it is between 9 and 11 degrees of Leo, heliocentric. When it is aphelion, that will occur when it is between 10 and 11 degrees of Aquarius. So again, heliocentric. Now, here's where it got a little weird. Bayer was able to see this same thing. He had tables of ephemeral data that he had purchased in New York City, and he knew that he was looking at this 9 to 11 degrees of Leo and 10 to 11 degrees of Aquarius for perihelion and aphelion. So he said, okay, let's take these heliocentric data points and let's just use the geocentric equivalent. So 9 to 11 of Leo, that is 131 degrees on the zodiac wheel. So Bayer said, okay, 131 heliocentric degrees, yeah, let's just call it 131 geocentric degrees. Same with the aphelion Aquarius point, that's 311 degrees. And Bayer said, okay, let's take 311 degrees heliocentric and we'll just call it 311 degrees geocentric. Now, how he made that connection, what prompted him to make that leap, he doesn't say. And I sure as hell cannot figure out what led him to do that. But what I'm going to show you now is some charts where I'm going to overlay the chart with Venus at 131 geocentric degrees and Venus at 311 geocentric degrees. Let's see what happens. Okay, so here's wheat futures. Now, I'm going to draw your attention to the left-hand side of the chart. I've got Venus over here at 311 degrees. You'll notice that the price of wheat, now this is March of 2022, and so we've got the Russian invasion of Ukraine going on, and there's a lot of concern about, are the exports of wheat from Ukraine going to make it out of the country onto the world markets? And so the price of wheat rose rather dramatically, but it hit a crest and it started to come down. And I want to show you that it started to come down just a little bit before Venus was at 311 geocentric degrees. And so if you're sitting there watching the price of wheat go up, and you know that there's some geopolitics involved with Russia, but then you know that you've got this Venus 311 degree event coming, you know the date when it's coming, your software is going to overlay that on the chart, or you're going to be able to pick that date out of your ephemeris tables. So then you say to yourself, okay, I know the date. What does that actually mean? How do I know if it's significant? Well, I'm going to draw your attention to the lower pane on the chart, the slow stochastic. And you'll see the red arrow that I've got here. That's when the stochastic went from being well above its upper bound to crossing down and through that upper boundary line. And anytime the slow stochastic does a reversal like that, there is going to be a change of trend. And that actually happened right around Venus 311 degrees. So if you know it's coming and you're watching the stochastic, you can pick off the change of trend. And if you were long wheat, get the hell out of the way because the trend is changing. And it certainly did, but then it tried to rebound, couldn't surpass the previous highs, and then literally the wheels fell off the wagon and down it came rather substantially from $12 a bushel down to $7 a bushel. Now, in August of 22, we had Venus at 131 degrees. So the price has been coming down, and you know that you've got this Venus event coming. You know the date. You're watching your stochastic, and what do you see? Stochastic hits its lower boundary level, makes a V bottom, gives you a crossover. You know the trend is changing. You know you've got the astro event. You know the price has come down significantly. You're looking intuitively for some kind of a bottom. Well, there it is, courtesy of Venus, verified by the slow stochastic. January of 2023, Venus 311 degrees. Wheat is kind of bumping along in a sideways to down manner. You know you've got this Venus 311 point coming. You're not quite sure what it means. Stochastic tells you. Stochastic was below its lower bound. It made a V bottom and it hooked up and crossed over. And that is exactly when you had your Venus 311-degree event. And it doesn't look like much on the chart, but it actually rallied a good 50 cents a bushel. And, if there's 5,000 bushels in a contract of wheat, that's $2,500 on a contract. Not too bad, thanks to Venus and thanks to Georg Bayer. And at the right-hand side of the chart, we've got Venus at 131 degrees. So the price is trending down, 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 grinding lower. And, intuitively, you're expecting at $6 a bushel, that's got to be a turning point of some sort. It's getting pretty cheap, and farmers at that price level aren't making a lot of money. So yes, the price did turn. And what we see is that the stochastic, just as Venus was at 131 degrees, the stochastic got above its upper bound. And so that's actually a buy signal. But you have to watch now for that stochastic to roll over and go below that upper boundary level. That's your sign to get out of the way. And so sure enough, Venus got you in on the trade, and it was a short one. It only lasted 4 or 5 trading sessions, and then it was time for you to take your profits and go. But again, you would have made a significant amount of money on that very short little trade, thanks to Venus, verified by this slow stochastic. Now, moving a little bit ahead into the middle part of 2023, we can see that in June of 2023, we had a Venus 131-degree event. Price had been moving up. You actually got your buy signal in the middle of June right at that Venus 131-degree point. So your stochastic gets above its upper bound. And look what price does. $6.20 a bushel goes up to $7.40. That's easy money. Thanks to Venus, thanks to Georg Bayer, verified by the slow stochastic. Because it wasn't long after that peak when the stochastic rolled over and it slipped beneath that upper bound. That's your sell signal to get out of the way. Now, here's what's interesting. I draw your attention to the right-hand side of this chart. You'll notice that the stochastic in late January took a run at that upper boundary. It didn't get above it. That is a problem. That says that there is potentially some weakness in the wheat market. There wasn't enough buyers to really get this thing ripping. So the stochastic has rolled over and it has declined. Venus will be at 311 degrees on the 25th of February. So you're going to be watching now. February 25th is getting near. You've got your stochastic looking like it might want to cross over. And so come February, 23rd, 24th, somewhere in there, if you see the stochastic getting above that upper boundary line, that is potentially a buy signal for you. And as long as it stays above there, you can remain long. But so something is going to happen here February 25th. I can also tell you that seasonally, typically, the price of wheat in February will reach an interim high, and it will then decline, and it will make a low coming into early April, and then it typically rallies right into harvest time. So we've got something interesting coming here. Venus, you got the date. You're going to watch the stochastic, and you know that typically seasonally there is a bit of a high towards that latter part of February, and then a decline into March, and then it starts to rally and firm up after that. So there's your roadmap going forward for wheat futures, courtesy of Venus and courtesy of Georg Bayer. Now, he did the same thing on Mars. So again, Mars orbits the sun. It is not perfectly circular, so there will be a perihelion event and there will be an aphelion event. If I look back over the past 6 years, I see Mars when it is at perihelion. That occurs right around 6 degrees of Pisces. The aphelion event occurs around 6 degrees of Virgo. And so again, Bayer said, okay, 6 degrees of Pisces is 336 degrees. Let's just call it 336 geocentric degrees. And 6 of Virgo is 156 degrees. Let's just call that 156 geocentric degrees. Again, how he made that leap in logic, don't know. But I'm going to show you now on some charts here what happens when Mars passes 336 and 156 geocentric degrees. Okay, so here is our wheat futures chart once again. And I've got Mars in the middle of the chart here, July of 2023. The price of wheat had a significant, sharp little rally. And look where the rally failed. Right at Mars, geocentric, 156 degrees. What did the stochastic do? Look at that. It failed to get convincingly above that upper boundary. That signals a problem. So you know that the price of wheat has been rallying. You know you've got Mars coming into 156 geocentric degrees. You know the stochastic is generally failing to give you that buy signal. What are you going to do? If you had been long, you're going to get the hell out of the way. And if you were not in wheat at that point, you certainly are not going to jump in because the stochastic is giving you a flashing red warning sign. And boy, look at what happened. Price of wheat was $7.50 a bushel. And coming into the end of 2023, it got down around $5.30. It was an ugly, ugly situation. Now, Mars, 336 degrees, that is going to occur right around the 30th of March. What did I tell you on the last slide? I said typically we get this decline in wheat prices going into late March, early April, and then we start to get a rally. Here it is, March 30th. Mars, 336 degrees. You're going to be watching for that date. You're going to be watching the stochastic, and hopefully you're going to get a buy signal of some sort, which will get the price of wheat not necessarily ripping higher, but certainly firming up, and that should last then into the harvest period for the winter wheat crop in July. Now, here's a chart of gold futures, and if you look at this chart, and again, you have to look also at the stochastic. You're going to see that Mars and Venus at those various geocentric points, there is an alignment to turning points, and there might even simply be an indication, and August of 2022 was a perfect example. The price is trending down on gold, and basically what Venus is saying is, nothing to see here. The downtrend is strong enough that the trend is going to remain intact. And how do you know that? Well, you're watching your stochastic as your trend indicator. Some of the other examples in here were followed shortly thereafter by swing highs, and you're going to be able to discern that from the stochastic. And so watch these geocentric points then in the context of gold. And so what have we got coming here? February 25th and March 30th. Those are going to be two very important dates for gold prices. And seasonally, typically, we're in a part of the year when gold generally kind of just trends sideways. So maybe in the context of gold, we're not going to see much at these particular time frames. Then again, with the way the geopolitics is unfolding in this world, you might see something. So keep your eye then on February 25th and March the 30th, and you're going to be watching the stochastic looking for a potential entry point for a short-term trade. E-mini S&P 500. So again, if I overlay some of these events, here's one here where Mars at 156 degrees in July of 2023 marked a significant turning point, and you would have been able to use your stochastic to discern what was happening. And look at what happened to the S&P. It declined rather notably. So now that brings me to the concerns that are being expressed by a lot of people on the internet, that these markets are getting overstretched. And really they're getting driven by some of these big tech names. And I've looked at some of these tech names, and in particular, I've looked at the operating cash flow. Okay, so how much is, Meta or Google or Amazon making on its cash flow statement from its operations? You take that amount of money and you divide that by the number of shares outstanding. So now you know how many dollars of cash flow per share that the company is generating from its operations. So then you say to yourself, let's suppose I wanted to buy $1 of that operating cash flow. How much would I have to pay? Well, you can't buy fractions of one share, but to answer the question, how much would you have to pay? It's going to vary from about $18 per dollar of operating cash flow to maybe $36. And I did notice that Nvidia was like $45 is what you'd have to pay to get $1 of their operating cash flow. So let's suppose that you spent $36 and you bought effectively $1 of cash flow. How do you get that $36 back? How do you break even on that investment? Well, very simple. That company has got to continue growing its cash flow, and that will in turn translate into higher share prices going forward. And eventually, if you've paid $36 for that dollar of operating cash flow, well, over enough time, the price of that share should go up by $36 and you can break even. Well, you know what? These tech stocks are priced to perfection. These prices that people are paying for Meta, for Nvidia, basically they're saying nothing untoward is going to happen in the economy. There's not going to be a hard landing or a soft landing. Everything is going to be perfectly wonderful. And we all know that that's never the case. There always are events that come along, economic slowdowns, what have you. We know that we're getting a little long in the tooth on the whole McWhorter cycle. And so to see these big hedge funds and these institutions paying what they're paying for these big tech stocks, that's frightening because it's not going to last. But they have the luxury of getting out before the average retail investor like you and I. They can start to exit their positions in the aftermarket after the market closes to you and I. They can also get out of the way in the pre-market early in the morning when you and I haven't even woken up yet, having our first cup of coffee. So the institutions can get in, they can drive these indexes higher, but they can get out before the retail investor. And it's going to be the retail investor who has shares of these tech companies in mutual funds and ETFs that ultimately takes the haircut. So be very, very careful if you are contemplating diving into the markets at this point. Now, with respect to the S&P 500, again, keep your eyes on late February and late March, because that's when we've got our next Venus and Mars geocentric angles that are forming, courtesy of Georg Bayer. Now, I'm just going to wrap up here with a little bit of additional mathematics here for you. And so here's a chart of the Dow Jones, and we can see in 2022 how the Dow Jones declined, and it bottomed in October of 2022, rallied into July of 2023, pulled back, and then in early November of 2023, it decided to rally again. So if I look at the amount that it declined in 2022, and then I know that it rallied in 23, it actually pulled back by Fibonacci 48.6% before the most recent rally started. Now, we've actually surpassed our January 2022 highs. So again, Fibonacci is telling a story here. We are now on our way to a 1.236 Fibonacci extension of the entire 2022 downwave. Another way of looking at it is if I take a look at the September 2022 to July 2023 rally, we are now, from the October 2023 lows, we are now poised to advance 1.236 times that September to July rally. So basically, both of these mathematical techniques point to one observation. The Dow is probably headed to 40,000. How far away is that? Not very far. So again, we've got February 25th and March 30th on the Georg Bayer technique bearing down on us, and we're very, very close to Dow 40,000. And if I do one more mathematical technique, I can apply some Fourier analysis, and I can basically break the price patterns on the Dow into a series of overlapping cosine and sine waves. The cosine model with 6 factors is showing an inflection point coming in, yeah, you guessed it, late February. And so when I see Fibonacci math, Georg Bayer astrology, and Fourier cosine modeling pointing to something happening in late February, the hairs on the back of my neck start to stand up. Be very, very careful if you're contemplating going into the markets right now, because these tech stocks, if they do decide to take a haircut, it's going to get rather crazy out there for a while until the dust settles. Same thing on the S&P 500. If I take a look at what I'm going to call point number 1, which is March 2023 low, the S&P rallied into July 2023, then it pulled back into October 2023. And so if I take the amount of rally from point number 2 to point number 1, and if I take a Fibonacci 1.236 times extension, that puts me at S&P 5100. Where are we now? I think this morning we're at about 5,040. So when I first started talking about this a few weeks ago, I thought there's no bloody way the S&P is going to get to 5,100. Well, we're damn near there right now. The other thing that you can do is if I take a Fibonacci 1.486 times extension of the March through July rally, that puts me at S&P 5,300. So again, we've got some Georg Bayer astrology. We've got some Fibonacci math giving us a potential overhead target. And what did I say? End of March is potentially something that is going to happen on the Georg Bayer astrology. Well, take a look at the bottom pane of this S&P chart. As we get into the end of March, early April, we are practically at a turning point on this Fourier wave analysis. So yeah, there is a turning point coming on the S&P, on the Dow. And if I did the same exercise on the NASDAQ, it's going to point to the same thing. There's a turning point coming. So is this going to be a complete wipeout and a repeat of 2020? No. We need this pullback. We need it. It's healthy. It's normal. And we've got to then get these markets to settle down. And after they've had a bit of a pullback, we've got to get going on a more broad-based rally. A lot of the stocks I'm looking at from the mining sector, from the energy sector, from the fertilizer and agricultural sectors, a lot of those things are just suffering because the big institutions are just chasing these tech stocks. So that's got to stop, and we got to get a more broad-based, sensible rally going, and I think we're going to get it, and it's coming very soon. And Fibonacci, Fourier analysis, and Georg Bayer's astrology are all telling us the same message. Okay, so I've dragged this one on a little bit longer than I had hoped, but I think I've made my point. Be very, very careful out there right now. And be sure to visit me at investingsuccess.ca. And I'm not going to go through all of the details here, but please take a look at what I have to offer, and please continue watching my YouTube videos and visit me on Substack. And let's continue with these videos, and I very much enjoy sharing information with all of you, and I do hope that it is helping you and giving you a slightly different perspective on what is happening on the markets. So we'll talk very, very soon. Thank you for your time today, and thanks for watching this presentation. Take care.